For the time being, let's welcome in Richard Harris, Executive Director at Port Shelter Investment Management. Thanks very much, Richard, for joining in. So, you know, the whole Asia tour, President Trump's Asia tour is catching all the headlines, and he's going around doing these trade deals and trade frameworks with all countries except India. I mean, at least the talks are still on, but there's no real headway. If indeed, the deal comes through with China, purely from an equity market sentiment perspective, could it drive FPIs further away from this market? Because we saw some glimpse of FPI buying about a week or 2 weeks back. That's again changed to a trickle now.
I don't think it's going to drive people away from the markets. If anything, it might actually lead to a further run in the bull market. I mean, what we're seeing really is Trump going around. He's negotiating with counterparties, but we've got precious little information from it. All we're getting is a series of declarations of victory from the US side. There's very little detail from the Chinese side. And relatively little detail elsewhere. I mean, he's meeting with Prime Minister Takaichi of Japan today. I kind of feel that that's probably going to go quite well. You know, Trump is rather soft on iron ladies. It's the same with Giorgia Meloni in Italy. And I have a feeling he may actually get on well with the Japanese Prime Minister. So all the talk of the trade deal that was done between Japan and the US just a month or so ago, which was extremely onerous, I think will just fade into the ether. So it's very difficult to see what's real. It's very difficult to see what's not real. And there's ample opportunity for all sides to pull back later on. But I think in the very short term, it just has to be bullish for markets.
But that includes India, Richard? It's not disadvantage India?
Yes, I think so. I don't see why India should necessarily be penalized. And don't forget, we do have the opportunity in the future for India and the US to have yet more talks, because it is an extremely important trading relationship. Don't forget that many Indians, first and second generation Indians, are at the very highest levels of Silicon Valley. So I think this is going to be very much on their heart. So I would also hold out hope the same sort of thing is going to happen between India and the US. But at the moment, clearly, with a trip to East Asia, it's going to be a focus on those countries.
Richard, gold prices seeing a bit of a shakeout after that incredible run. Any prognosis here?
Yeah, it's not surprising that gold would have come back. It's come back below 4,000. It may actually start to find 4,000 is a little bit of a resistance level. But I think gold is interesting. Just around 2005, when the equity market started to move, gold started to move as well. And it powered through 2008 when equity markets came back. And it didn't really stop rising until around 2011, when confidence had come back into financial assets. So I do think gold is interesting to be in. I think certainly if we do see some sort of reversal in these markets, and by reversal, I mean something like a crash, because we are heading for that sort of territory. I mean, Jamie Dimon and Ray Dalio have been saying the same thing. We just don't know the timing. It could be 2 years out, but we are headed for some sort of reversal. And I think in that environment, investors will continue to accumulate gold. They'll continue to accumulate cash, just in fear of something quite serious happening a little bit further on.
All right. Hi, Richard. Good morning and good to see you in. What are you making of the mother market, which is the US market? You know, there are calls that maybe, in fact, that's getting into a bit of a bubble territory, particularly tech, AI. You know, some of those names out there. The NASDAQ is up more than 25% in a single year. But if I look at earnings coming out of the United States, and just looking at S&P 500 companies, the earnings growth of there is high single digit to double digit, which is very, very encouraging. What is your call with regard to the US markets, and also come in on this so-called tech bubble? Do you think it's reaching that territory, or do you think it has more legs?
Oh, I think we're deeply into that territory. If you look at some of the greats who've studied crashes in the past, it's things like high valuation, high debt, reduction of regulation, and a big story. Don't forget, in the dot-com bubble, we had the dot-com story. In 2008, we had the housing story. Now we've got the AI story, with companies basically lending to each other through the supply chain. Nvidia's lending to OpenAI so that OpenAI will buy Nvidia chips. And these companies can raise vast amounts of money. That money ends up in the stock market, either through earnings or through inflation evaluation. So, no, I think we're in the bubble already in the US. But, you know, bull markets die hard. It could be quite a time before we actually see it really come to a head. And then it may be due to some kind of unknown event that we just have no idea what it is likely to be at this moment in time.
But I guess caution would be well advised then at this point in time if you're saying that the US market, at least with the AI stocks, is already in a bubble. We'll remember that, Richard. Thank you very much for joining in, and we look forward to more conversations again, a couple of weeks down the line. You have a good day.
Thank you. You too.
Thank you. Well.